Welcome back. 20 points lower. We are at 18,465 on the Nifty. Suresh Ganapathy is banking analyst at Macquarie Capital Securities. He's joining us right now to talk about, a new entrant into the financial services space, Jio Financial Services. Suresh has written a note recently, a couple of days back, outlining why he thinks this will be a disruptor for many existing incumbents in the space. He specifically mentioned two names, Bajaj Finance and Paytm, which are most at risk. Suresh, but let's start with the basics. Why do you think this will be a great moment of disruption? I mean, just explain your thought process.
Yeah, sure. So, one of the biggest advantages that JFS will come with this truckloads of capital. If you were to really take the 6% stake that they hold in Reliance Industries Limited, that at current market value is closer to about 1 trillion rupees or a lakh crore. And, that makes them the fifth largest financial services entity in terms of net worth. So imagine the kind of potential that they have got. And today, for example, Bajaj Finance is a net worth of closer to about 50,000 crores. So what we're talking about here is that at the end of the day, the eventual game for any NBFC, Fintech, or, most of the financial services entity is to enter into lending business and, of course, make money out of that. And for that, you need capital, you need underwriting capabilities. And I'm pretty sure GFS, with the kind of people that they have on board already and the kind of capital and wherewithal that the entire group, in fact, Reliance Industries has in terms of execution, they can be a formidable force to reckon with over the course of next, say, 5 to 10 years.
Suresh, do you think, it'll be in your opinion, of course, we'll find out soon, it'll be a organic kind of expansion strategy, or it'll include inorganic activity as well? In various sub-segments, yes.
Correct, that's right. So in various subsegments, it's going to be a combination of both. For example, in the insurance space, it's unlikely that the IRDA will be happy to give them a license through the acquisition route. Right, at the end of the day, if you look at the regulator, they have been pretty forthcoming in telling that they want to increase penetration, they want more players, they want to give licenses to newer players, and thereby expand the scope of the market. So I'm not sure whether the acquisition route will be encouraged. In NBFCs, the Reserve Bank of India could be pretty happy, because at the end of the day, they do believe that there is always going to be some risk with the NBFCs, and they are anyways been talking about the fact that larger NBFCs need to get converted to a bank. So if it's going to be Jio coming with its enormous amounts of capital trying to take over a couple of NBFCs, so be it. Reserve Bank of India is pretty happy with that, is what our view is. So it's going to be a combination of both organic as well as inorganic route that GFS will follow in our view, depending upon the segments that they offer.
Why do you say the most at risk are Bajaj Finance and Paytm? Why those two?
Okay. Yeah, sure. Look, I'm not going to get into specific names here, Prashant. I'm pretty clear about it. But then what I'm arguing here is like this, right? For example, let's take Fintech as a category. Now, clearly, the biggest advantage that JFS has is the enormous amounts of data, the reach in terms of the customers, the reach in terms of the distribution outlets that they have got. And on top of that, they've got the capital and the ability, obviously, to eventually lend and make money out of it. Obviously, assuming, of course, they go about hiring the right kind of people. So clearly, that can be pretty disruptive to the NBFC as well as to the fintech ecosystem. Because what happens here is that unlike other fintechs and NBFCs who are compelled to borrow at, say, 12, 13, 14% rates from the ecosystem, from the financial markets, JFS will come with a very good AAA rating and can borrow at just the marginal spread over government security. So you can imagine what a competitive advantage that it gives in case you really can mobilize funds at that kind of rates and eventually be very competitive in all the segments that, say, a fintech or an NBFC operates. So a lot of good quality customers can indeed migrate to JFS at attractive rates in case they're able to leverage well their entire distribution ecosystem.
Okay. No, got that. So, in a way, do you see any impact on banks, or you think they are well placed to kind of face any disruption? Yes.
Yeah, so I think, Prashant, a lot will really depend upon the view that the Reserve Bank of India takes in terms of giving licenses to corporate entities, right? As of now, we are going with the assumption that the RBI is still reluctant to give licenses to corporate entities. So we will see how the regulatory landscape evolves. And that if indeed is the case, very clearly, GFS won't be able to raise deposits and compete with banks in those segments that banks cater to. So I think the relative risk of disruption, in my opinion, is least in the banking sector from JFS compared to any of the other sectors, because obviously banks will always have that greater advantage of the CASA deposits and eventually the cost of funds, and therefore the highly attractive customers or top customers will always be with the banks because the kind of rates that they're going to get is very difficult to match.
I'll come to insurance in just a bit, Suresh. You have active coverage on Paytm as well. I mean, only if you want to. How is the business kind of, because they put out monthly updates as well. If you can provide our viewers with an update on how things are progressing, business momentum-wise, according to you.
Yeah, so the segment, of course, where they have, of course, positively surprised this is on the financial services front, whereby the growth in the distribution business that they have been seeing month after month, of course, is pretty strong. So to that extent, there is a positive surprise there, and there has been a little relative amount of cost consciousness also from them. But as I said, we still need to see accounting profits, and therefore there the visibility is still pretty low. So we'll see how things evolve there, and of course we also have we have to see how the competitive landscape as well as the regulatory landscape evolves.
No, absolutely, and that's a point that you made earlier as well. On insurance, Suresh, I mean, what's your view with these latest IRDAI rules on expensive management limits, etc.?
Oh, that's good. I mean, I think getting away with product caps and going with an overall EOM limit is giving a greater degree of flexibility to the players. And what IRDA is telling here is that I'm not going to micromanage it. You want to do depending upon what kind of products you want. You give a higher commission rate. Your EOM at the product level could be higher. I don't care. But at an overall company level, this is what I'm defining, and that is really giving a lot of flexibility to the insurance companies. They've also slightly relaxed the limit for the standalone health insurance players. It is also good because clearly one of the challenges that the Sahis face in India is that they really run a very high operating expenses, specifically the smaller ones. So to get a slightly higher leeway of 35% compared to 30% for others is also a step in the right direction. Net, I read the current regulator being very progressive, very forthcoming. They've also obviously, as you know, liberalized the open architecture on the bank assurance space. You can now have 9 partners each, right? So all that obviously are steps in the right direction, which will only increase the profitability of the industry over the longer term.
You know, the no product caps and an overall EOM limit cap. How does this? So the regulator absolutely has been progressive. They're coming up with this Bhima Sugam, right? An insurance aggregator, and which will offer sort of products at very low commissions compared to existing players out there, like Policy Bazaar, etc., and others as well. Is there a, how does this? I mean, is this product cap or commission, no commission? Does it change anything for what how we should read Bhima Sugam, the new entity, and what they'll be able to do in the market?
No, look, more than the product caps here, I think Bhima Sugam as an entity, as a concept alone is a fantastic concept. Now, it all really depends upon how the ecosystem develops. You're talking about the entire value chain being taken through Bhima Sugam, right from origination and settlement of claims and processing, everything you can do through that portal. So we'll have to see how it shapes up over the course of next 3-4 years. Who knows? I mean, Prashant, this could be the UPI moment for the insurance sector. I mean, it can only expand the market. What this actually does is a lot of intermediaries in the system. I don't want to take out any specific names here, but then they could be definitely, their business models could be at risk, right? Because at the end of the day, you have a government sponsored, let me put it this way, offering at very attractive rates and also trying to expand the market. And that very very clearly gives a great advantage in terms of the current existing life insurance players to further expand the market and go onto that portal. But the intermediaries who are doing this business, their business could be at risk in case Bhima Sugam does pretty well. And that's what actually happened to the payments business once UPI came in.
All right. Suresh, we'll leave it there. A lot more to chat, but we're out of time, at least on this interaction. So hope to have you back soon again. Thanks very much for joining us here on CNBC TV18. Well, the market's exactly where it was. So no real big change, no movement. 10 points lower, 18,472 is where we're at. We'll take your leave. It's a wrap on Bazaar from Nigel, me, everyone on the team. Goodbye. Trading ideas coming up on Chartbusters next.